Xi Jinping will meet with Vladimir Putin later this month. Hitler met with Mussolini before he invaded Poland. Xi Jinping will ask the Communist Party for another term at the end of October. China is in a real estate crisis. The Chinese middle class is running on the banks. China can only participate in world trade because of the dollars they have accumulated available to them as a result of trade imbalance. U.S. financial institutions are holding much of China's real estate debt. China is in the middle of the worst drought in recorded history. China's manufacturing is experiencing blackouts. China's demographics are upside down. Russia's demographics are upside down. 80% of the goods that you buy from Amazon, Walmart, and Target are originated in China. Amazon has laid off 100,000 employees, shut down and stopped building 66 delivery stations, and stopped building 10 distribution centers. Walmart has announced layoffs. 55% of Tesla's sales last quarter were made and sold in China. 48% of General Motors sales were made and sold in China. China is threatening to take over Taiwan. U.S. says that won't happen. World War II started on September the 1st, 1939. The United States did not get involved until December the 7th, 1941, 2 years later when Japan bombed Pearl Harbor.
Best of Us Investors presents Carrie Griegmeyer.
That was my 2-minute drill as to why to not invest in today's stock market, but instead to invest in tomorrow's stock market. And in order to invest in tomorrow's stock market, you need to know what's going on in the world around you and how the world is going to change. And in many cases, you can't figure that out unless you understand history. And we are in a pivotal point in our history. We have two nations whose demographics are upside down. That means they don't have any young people. And if they don't have any young people, they don't have workers. And if they don't have workers, they don't have a tax base. And if their population is upside down and they have a lot of old people because of improved medical conditions, their expenses are going up while their revenues are going down. So they have to make aggressive moves. We can learn that from history. That's why Hitler went into Austria and no one opposed them, much as Vladimir thought he would go into Ukraine and no one would impose him. And then what Hitler did was get Mussolini's approval for invading Poland. And I think that's what the meeting that I talked to you about between Vladimir and Xi Jinping is going to happen the end of this month. Then Xi Jinping will go before the Communist Party in October when he is proposing to go forward with another term and explain to the Communist Party the agreement that he and Vladimir Putin have and how they are going to proceed to create a second source of power, a second world currency, so that they can get out from under the thumb of the United States. History repeats itself. But if you don't know history, if you haven't read Winston Churchill's book, The Gathering Storm, you can't connect the dots. You don't know that what they are doing, what Xi Jinping is doing, is exactly the same thing that happened with Adolf Hitler. He needed, in order to keep Germany alive, he needed to invade. Vladimir, in order to keep his country alive, he needed to invade. Xi Jinping and the Communist Party outgrew the ability of his population to absorb the real estate that they built. They have a currency that is nowhere wanted anywhere in the world, and the United States, their biggest buyer of goods, is pulling back and saying we don't want to be dependent on China anymore because we learned that from the coronavirus, and we have to bring manufacturing back to the United States using our goods, our materials, and creating alliances that we can depend on, because we know we cannot depend on China. Xi Jinping announced it. By 1942, he will dominate the United States in commerce, he will dominate them in military, and he will dominate them as a world currency. We know what they want to do. We have figured out we got to get away from them. And that is why you need to invest based on what you know is going to happen, or what you believe is going to happen. Oh, I know interest rates are high and mortgage payments are going up, but this will all take care of itself. What I'm talking about will not. Vladimir is backed into a corner. He did not expect Ukraine to put up the resistance they've had. He will pull back and go through the winter, cut off the oil and gas to Europe, and blackmail them, hopefully into submission, so he doesn't have to use his ultimate weapon, and that is nuclear warfare. Will he do that? I don't know. Did we do it? Yes. We annihilated Hiroshima and Nagasaki to bring an end to the resistance or the war with Japan, which then led to the end of World War II. History repeats itself. So what do you do as an investor? What do I do? Well, I'm shorting China. I'm investing in liquid natural gas. I'm investing in petroleum, and now I'm considering shorting the NASDAQ market. Let's go to my moomoo charts and take a look at it. Okay, this is my moomoo charts. I first got involved in moomoo because they volunteered to be a sponsor of my channel, and I really enjoy their mobile app because I can get to it anytime to see what the market is doing. And then I discovered their desktop app, and it's better than anything I've seen. As you can see, I've got over here my watch list, and the chart I have up right now is the SQQQ. That is the short of the NASDAQ market. And as you can see, it has moved above the 200-day moving average. That's the red line, and that's my momentum indicator. And then it has moved above the 50-day moving average, which is a confirmation of momentum, and it's right on the 9-day, which is more of a trading indicator. The other thing I like that caught my eye is the amount of volume that has moved in and out of here, starting in roughly January or maybe even in November of 2021. So the momentum is moving up, which tells me that I'm not the only person who recognizes that we might be in for some tough times. Although, and I see a lot of people talking about the fall of China, but I don't see them talking about the implications that it's going to have on Amazon, on Walmart, on the car companies, and really anything and everything that you and I use. So then what I wanted to do was, okay, let's compare that then to the inverse, which would be the QQQs. And as you can see, it confirms that over here we have moved below the momentum line, the 200-day moving average, and below the 50, and we've actually seen a decrease in volume. So the MACD shows that there is a decrease as well. So that's kind of the way I'm looking at it. And then what I wanted to do was go to this indication up here. It says VS, or standing for stock, compare, or verse. Okay, here what we're doing is we've chosen a starting point of 6 months ago, and the blue line represents the SQQ, and the orange line represents the QQQ. So you can see they moved in opposite of each other, but heavier up on the SQQ than the down on the QQQ. If I put it out to a year, we can see more volatility. And actually, this would have been, what would that have been? That would have been in June of 22. And then we can probably go back, let's go back 3 years. And this, of course, is the coronavirus, the March of 20. So I want you to see this and understand how to use it. As I say, moomoo gives you free stocks. They're aggressive. They want your business. You can get, I think it's up to 13. It changes regularly. There's a link down there. But I really have been sold on it, not so much as a trading vehicle, although I do use it, but as the tools that they make available to me. I have not found. My primary broker is E-Trade. They don't give me this. Flat out, they don't give it to me. My secondary is Schwab. I can't see where they give me much of anything. But these people are aggressive. I met with their one of their officers, corporate officers in Orlando this last week, and they said they built this all in-house. So it's very impressive and a very good tool to use. So that's my take on what's going to happen. Let's just look a little bit deeper in it. At the first of the video, I gave you 20 key points that I think are going to affect the stock market in the future. I watch CNBC, I watch Bloomberg's, and all they can talk about is inflation and interest rates and what's happening today. You can't invest in what's going to happen today because you just can't move that fast. You can't anticipate what's going to happen tomorrow and try to make money in it, unless you just sit in front of your computer and you're not even paying attention. You're just moving with momentum. No, I'm a long-term investor, and I have preached and preached that I would never sell my big six, and I would never sell Apple and Microsoft and Facebook and NVIDIA. I would never sell those because they are the stocks of the future, and I believe they are. But I also believe that I can learn from history, and I can pay attention, and I can see we're going down a road that could be World War III, and it could be the collective action of Russia and China to displace the United States as the superpower. They aren't going to survive as countries if they don't do something. So don't judge them too harshly. They're just trying to save their country and save their population. But you need to be selfish and understand that this is going to affect Amazon. This is going to affect Walmart. It's going to affect Goldman Sachs. It's going to affect anything and everything that you're invested in. Now, there are some positives because as we move into this, certain commodities, certain companies are going to benefit from it. We need to put Lockheed Martin in our watch list. And if, in fact, we do end up in a war, we need to build some positions in defense stocks. If you don't pay attention to this, if you don't recognize these 20 elements that I put in front of you as something that is going to affect you, not if you've got 50 years in front of you, but if you've got 2 years in front of you, this is going to affect the stock market. As I said, when I saw that Amazon was shutting down distribution centers and stopped building 16 of them, I said, why? Everything I buy through Amazon. Well, not if Amazon can't get it. Not if they can't get merchandise out of a country that we're at war with. And is that possible? Well, we weren't at war with Japan until they bombed Pearl Harbor. So we have a conflict where if they move to take over Taiwan, might they just keep flying east and make a stop in Guam and make a stop in Pearl Harbor? I don't know. But I can't afford to leave my money in a market that has exposure in this way. It would be foolish on my part. So I encourage you to educate yourself. Go back and watch those 20 items. If you'd like, here, okay, I'll create a PDF on those 20 items and put a link down in the, I get tired of doing all the work, and put a link down in the description so that you can review them. And then maybe you can add to them and send them back to me. All right? Because I want you to do some of the work too. All right, I'll probably be doing this again tomorrow. Talk to you then.